Welcome you all for a special episode today. I will cover a case study to explain how to buy and sell stocks with the help of derivatives. Watch this till end of the video, so that you don't miss anything. Here I took the example of a popular stock in the IT sector. It is traded both in India and US stock exchange. This stock is under selling pressure for a good period of time. What I want to show, you can still earn from a stock during a time when it is not performing well for long-term investors. Some practical session is always great in between concept learnings. I will come back to the case study. Allow me to explain the background and theory behind the particular trade so that you can try it for yourself. Many of you buy stocks for market. Intention is to grow capital through investments. But most of us are always confused. It is always tricky to decide when to buy and when to sell. You can subscribe for IPO. This is to buy new stock to be listed on the exchange shortly. You can buy already exchange-listed stocks. Means you are buying from secondary market. IPOs are most of the time overpriced. Their purpose is to reward promoters, not the new investors. You have an unlimited choice of stocks that already have established track record of performance in the secondary market. It is advisable to buy always from the secondary market. Today's session will help you to know better what should be buy and sell strategy with minimal risk. Most common behavioral pattern is immediately after you buy, you start tracking the stock price and hope it to increase only. That's not reality. No point in doing so. Patience is the key. But unlimited patience is also not a common human behavior. If stock price goes down, you consider your decision was wrong. If stock price goes up, you feel you are intelligent. Never feel like that. Successful traders are not God, they follow process. When stock price does not go in your favor, you generally start cursing the market as treacherous. Well, you need to accept market is supreme. Please recall in my earlier video, I discussed that market operators adapt the strategy, divide and rule. Their strategy every time operates to derail you. It impacts weaker traders a lot. Their conviction level is low. They cannot hold emotions too long. You need to be creative to solidify your own defense. When we talk about traders, they are primarily of two types. Some follow technical analysis to trade for shorter time frame. Some follow fundamental analysis to trade for longer time frame. They may go wrong. Everyone has the right to be wrong. We cannot say analysis is wrong, but most of the theories are mainly based on statistical probabilities. There is no guarantee that future will follow past. You cannot leave your money on the table depending on the probabilities only. We are not in casino. What will be my strategy in such scenario? First, I will study fundamentals, whether a stock is worth to buy from valuation perspective. But will not buy straight away even valuation is reasonable. I will combine derivative strategy to determine at what level to buy and at what level to sell. I am completely fine not to time the market. Market will always give opportunities. Now or later. Absolutely no need to time the market. Essentially my strategy will be a hybrid. I will sell one lot of put option below the current spot value at such a strike price, where I am comfortable to buy the stock. Selling put option means you have right to sell, but not an obligation. As long as spot price is not falling below that strike price, I will continue to eat option premium and earn small amount. When spot price comes down the strike price, I will square off my put position. I will buy equivalent number of shares from market into my Daymod account holding. Then I will sell one lot of call option at much higher strike price, where I am okay to sell my holding. As long as stock is trading below my selling target, I will continue to eat call premium and earn small amount. When I say, eat premium, it means take benefit from theta decay. Theta decay is like gold for option sellers. When stock price goes beyond my sell target level, I will square off call position. I will also sell my holding at the same time, and that will surely a good profit amount. The whole operation can take few weeks or few months. That does not really matter too much in long run. Now, concentrate to this case study. You can pause to give more time to see each step carefully. Most important part in this case, I did not time the market. I just timed my action according to the market. Never try to time the market. Nobody can do that perfectly. Also, I used my fundamental and technical knowledge. but did not depend on them 100%. I am okay with small profit or loss for longer period. Big profit is bound to come one day and I will grab it and lead the trade. I do not believe in stop losses. Putting a stop loss is commonly used technique by short-term traders. I have high confidence in India growth story and I trust India's quality business. Good businesses have strength and higher probability to overcome difficult time. Historically, they have rewarded patient investors. Now, I believe you can understand the logic for the trade I used for demonstration. That was not hypothetical. It is a real trade that I executed recently. Let me summarize the case. I wanted to buy Infosys below 1300. So, sold one lot of put option of strike price of 1300. Share price crashed to 1230. I lost money on put option sell position. But I did take delivery of shares at 1230 where the valuation is attractive. Here after I did sell call option of strike price of 1450. 1450 is my selling target level. Share price shoots up to 1500. So, I lost money for the call position. I sold all my holding with a profit of 270 per share. So, at exit, overall, it is a decent profit. Please go through the detailed calculation at the end of video. You will notice return on investment for the period of 6 months is 13%. That means it's around 24% after tax return on annual basis. Many traders will not be excited to this. They look for astronomical return with a gambler's mindset. But remember, if you can apply this discipline on your bigger capital, opportunity is immense. I will suggest you to check on data and chronology for better understanding on the process. I guess you will have a lot of questions. Please post your queries in the comments section. If you are a beginner, and not familiar of option instruments, you might have struggled to understand the concept. This is little advanced. No worries. My future videos will help you to know more on basics and you can come back to this video to understand it better. You can bookmark this video for future. Hope you liked the session and learned something new. Happy trading! Stay tuned for the next one. You can click on the logo to subscribe the channel.